Hey, Brad Niccum Nest Mortgage Group here. It's hard to believe it's the last week of September already. This year is absolutely flying by. If any of you seen my Facebook post last week showing the bond was taking a hit, you know that rates have started moving in the wrong direction. A lot of people call me and ask me, hey, what's the rate today? So I want to talk about a few of the things that actually determine what interest rates are to kind of clear up some of those thoughts, because there's not just a rate today. Rates do move multiple times every day. They move following what's called the 10-year Treasury index. So that's a great index to kind of get an idea of what's happening with rates. Today, it was trading this morning at 1.48, and that's the highest it's been since July 1st, 2021. So the higher the bond yield, the higher the rates go. Now, what does that mean to an individual? If you're a buyer today with a credit score 740 or above, because that is the highest bracket, and you're buying a house with 20% down, and the loan amount on that house you're going to buy is at the conventional max, $548,250, you may have a rate today in the real high twos. But if you have a credit score of 630 and you're putting down 5%, and your loan amount's going to be under $100,000, your rate could be as high as potentially 4%. So when you look at what rates are, it's very much an individual number based off your information. The different rates are determined by what we call in the mortgage business loan level price adjustments, or LLPAs. There are a few different LLPAs on all parts of the loan. Credit scores have LLPAs, and they have a different adjustment at each credit score level: 620, 640, 680, 700, 720, 740. Loan amounts also have LLPAs. So the lower the loan amount, the higher that adjustment. The higher the loan amount, the lower the adjustment. And then on down payments as well. So if you look at conventional loans, 3% down or 97% loan to value would be the highest adjustment, where maybe 25% down is a better adjustment. So there's a higher score for your larger loan amount, higher down payment, and better credit score. So that kind of gives you an idea of why rates are like they are for each individual person. All loan types have these same loan level price adjustments built somewhere inside of them: FHA, USDA, or VA. So and their rates are different than conventional rates as well. So when you look at that, hey, what's your rate today? I can tell people all the time, somewhere between 2 and 12. What are you looking to do? Because it is so determined on what each client kind of brings to the party. So if you have questions about your interest rate, or if you have a client and you have a question about their interest rate, feel free to give me a call. Pre-approvals are still getting done in less than an hour or so, 7 days a week. Just call me when you have that client that's getting ready to go out there and shop, and I'll get them taken care of and pre-approved right away. Turn times are still running that 48 hours on all loan types, close in less than 30 days. Conventional loans with 20% down, a lot of those we're getting appraisal waivers, close that loan in like 15 days. If you want to find out how your buyer could potentially receive an appraisal waiver before they get an accepted offer, please give me a call. I'd love to talk to you about that. About 40% of all of our purchases are getting pre-approval, or 40% of all of our pre-approvals with 20% down are getting an appraisal waiver. So it's a great way to have your buyer have a little step up in this market. So give me a call. I'd love to work with you on a new deal. Phone number 317-538-9825. Thanks for watching. Have a great day.